I'm with Anita Skipper of Aviva Investors, and we've both just been at the launch of Better Stewardship, an agenda for concerted action, which is a Tomorrow's Company consultation document which draws on the work of the Stewardship Alliance of institutional investors and indeed of the work of our Good Governance Forum. Anita, thank you for being on the panel this morning. Can you talk about the Stewardship Alliance and the work that preceded it and why you think it's important?
From our perspective at Aviva Investors, stewardship is fundamental to how we manage our funds. And we saw as we were going through the whole stewardship process that it wasn't working how it should. There have been a lot of initiatives from the FRC. We got a stewardship code, we got a corporate governance code, and yet we weren't hitting the mark. So we felt that there needed to be extra initiatives, extra impetus into the market to try and achieve a better outcome from stewardship. And that's why we got involved.
Thank you. And tell me a little bit more about the agenda for action in terms of the concrete actions that you and other members of the Stewardship Alliance worked on so hard that are part of this document, and what we're really asking others to do now with the work that we've done.
Yeah. Well, first of all, one of the things that we considered was a shortfall was that stewardship only ever talked about asset owners or asset managers. And yet there are influences all along the investment chain that nobody was talking about. And we felt that was really what needed to be addressed. So first of all, before we even get to the actions, we need to confirm that everyone along that chain needed to have a stewardship agenda. And that's what this paper is basically saying. We need to talk about everyone. And then in this paper, we have some actions for each part of that chain for discussion. It's a consultation paper. But if we can get some of these actions realized, I think, step by step, we will be making much more progress. And the first thing, and it's opportune right now, is the Stewardship Code is being reviewed, so is the Corporate Governance Code. And we're very encouraged to see where the FRC is going so far, but both consultations. I'm not confident that everything they say they want to put into both codes or things that they're considering will actually happen, because there are still opposing forces to good stewardship in the investment chain.
We make the observation in the document that stewardship hasn't progressed as much as one might have hoped when the UK had its first stewardship code all those years ago. And you had some pretty trenchant comments at the event this morning about why that was. Would you like to talk about the barriers, the obstacles?
The barriers and obstacles are down at an individual level. So we've had all these papers that have proven that taking the long-term view adds value to your stock, that if you are a responsible company, you're more likely to be trusted by your investors, lower cost of capital, all those things. And you would think that would be enough for the whole market to become much more longer term. It's in everyone's interest. But it's not in everyone's interest when you go down to the individual incentives that people are working with. So, for example, investment consultants may not be incentivized to keep a fund manager for their clients because they get paid more if they find new ones. So therefore, they're not going to be promoting that to pension funds. Pension funds, therefore, don't put pressure on investment managers like us, so we have no demand for it. And if we have no demand, why are we doing it? Because we listen to what our clients say, and the clients are not saying they want stewardship. And because we're also being measured over the shorter term, incentives for a lot of investment firms are still short term. Not so much at Aviva Investors, because we're one of those that believe in the long term. But as a market, it's still there. So if you're looking in the round, all the investment managers that go and speak with companies, they're not asking companies for the long term. And even now, companies will tell us, well, nobody's interested in this stuff. In fact, there was an FT article just yesterday saying that, when companies talk about purpose and talk about social good, analysts' eyes just glaze over until they start talking about numbers and, how much of this product you're going to sell or something like that. And that's the way it is. That's the context we're working with. And then overriding all that is the remuneration that makes it so lucrative for everyone to stick with the short term.
So incentives are very important, and you've talked about also the demand side. So we need the demand coming from the asset owners, and in the report it suggests that there's a third of asset owners who are still not actually making clear that they want stewardship from their clients who are asset managers. But we also talked a lot at the event and talked in the report about the other side of what we call the pincer movement, which is government. Yeah. Can you talk a little bit about what you see as the government's part in making things better for stewardship?
I think government itself needs to be much more joined up if it's going to tackle stewardship in the round. And they have a very good opportunity through the FRC at the moment in promoting the whole stewardship agenda. And I think one very good thing from this paper is this paper asks everyone in the investment chain to say, what have you done personally, your organization, to increase the value of the assets long term when you pass the assets on. And I think if everybody focuses their mind on that one question and then have to actually say what they're doing, I think you'd have a very different perspective. But I think it's not just the market, it's not the government saying you got to do it, government's got to do it themselves. So I think the FCA, BEIS, the Treasury, whenever they come up with anything, they've got to ask themselves the same question, because they will be bombarded with vested interests from all angles. And I think before they take on the vested interests, they've got to say, is this actually promoting that purpose?
So we're actually talking about the need for government to have a long-term vision of wealth creation, and for that to be a joined-up approach across departments. And stewardship as the idea that you see in the best-run family businesses, that you're thinking about the responsible management of the resources you're entrusted with, or the assets you're entrusted with, so that you pass them on in better condition. Yeah. If I love your idea that and indeed it's in the paper, that should be a basis of people being accountable for what they've done under the Stewardship Code.
I think there's a misunderstanding of what stewardship actually is, and I think that has something to do with the Stewardship Code, because the Stewardship Code is so focused on process and not outcomes. Yes. Stewardship has become, how many meetings have you held? Who did you call? And disclose to me what you talked about, but nothing about, well, did that actually improve the situation? Does it help this company over the longer term? That's not theirs, and that's what's missing, and that's really what needs to be in there. What
would you like to see companies do differently, listed companies do differently in your engagement with them?
Well, I think listed companies are actually behaving quite rationally, just like the rest of the market. It's just that the incentives aren't there for them to do anything different, other than one or two enlightened companies who say, I don't care what the investment markets say, I don't care what our shareholders are saying, I'm going to take this route. Not many of them, and there'll be a brave company that will do that. But I think it's in their own interest. If you see how society has changed so dramatically, I would say even in the last 10 years, it's been coming, and they are the people you're buying from, selling to, your reputation depends on what they think of you. If you don't actually make that move now, in the long term, I think those companies are going to be the losers.
And you bring us to the very opening sentence of the document, which says there is a troubling disconnect between the wealth creation system and the society which it's there to serve. So my last question to you is, if we're back here in 5 years' time, and we've really had an impact, how would you define the progress that we've made?
Oh, I'd love it if we had some kind of impact. And I think that, this attention to the whole chain, attention to the incentives within the chain, attention to purpose, I think we have a good chance of making progress, because it's what people who invest understand. It's what the public will understand. It's what the public wants. But from our meeting this morning, I was so surprised, positively surprised by the engagement of so many people.
Yes. We had the regulators there, we had the civil servants there from the key departments, we had business there, we had investors there. Yes.
Yeah. So they all want to be a part of this discussion. So I think, in 5 years' time, if we have more understanding about the core, critical core of fund managers who are taking the long-term view, and that has increased, and companies who are telling the long-term story, because part of the problem is companies don't think that investors want the long-term story, so they're not telling it. So a good place for them to start is to start telling their long-term story so people buy into it.
That's a very good note on which to end a discussion about tomorrow's company and indeed tomorrow's investors. Anita Skipper, thank you very much.